Pacific Land Trust. Yes, Texas Pacific Land Trust absolutely has been a bit of a sideways one stock in 2023. But over its current 5-6 years, it's really been a stock that has flown up and crashed, flown up and crashed. And we're in a crash moment at the moment. Will it continue? Will it have skyrocketed a little bit from my time of recording? It may have with the winter, the Christmas rally. But anyway, we're going to do a stock analysis of Texas Pacific Land Trust. This is a stock I've always been interested in. I never pulled the trigger, and this is one of my stocks I wish I did, because it was a $500 stock at one point when I first looked at it, and I didn't invest. But at the end of the day, it was a lot of money for me, because I like to have a lot of money in these stocks, and to me, I just couldn't question in terms of money for value, where I could have got better value somewhere else. But it's just one of those stocks that I think it's just been a money trailer. Keeps on doing everything right. People say it hasn't been that great, but I mean, all the metrics are pretty good. So when I do the stock analysis, this will give you a thing. The only question mark is one thing that maybe Texas Pacific Land is not doing, or you'll find out right at the end when we look at the intrinsic value. Maybe the stock is overvalued. But we'll get to it right here at Barry Charles. Remember to like and subscribe if you like the video. Let's get to it. Let's look at the stock analysis of Texas Pacific Land. Yes. Well, we start off with revenue, which I was surprised it's not that big. But anyway, 66.7. What is that? What? 667 million. Is that what it is? Yes, indeed. This is an interesting stock for mine. Very, very interesting stock. 667 million. It was a 2x from 2020, with a net profit as well at 446 million. That's what I couldn't understand with this company. Is like, wow, they make a lot on there from the revenue to net profit. It a 2x from last year in 2021. So the revenue's gone up 2x in 2 years, and net profit's gone up in just 1 year by 50%. It's absolutely staggering. Earnings per share 52, with P/E ratio of 34, so there's still some growth in this company. The stock analysis, the short interest is about 4.5, market cap around 14 billion at the moment. The 52 week range, well, 1266 at one point, and then 2739, so around the middle of the road at the moment, around 1700. So yes, you could have got it at a better price, and if you got it at that price, you're probably laughing at yourself. But you wouldn't be laughing if you bought it at 2,700. You'll be crying all the way. But will it go back up to there? Well, find out at the end. But this was a stunner. Return on invested capital, 121%. You're kidding me? 121%. Ding, ding, ding. Bye, bye, bye. Not financial advice, but absolutely outstanding. And it just gets better from here. The dividend, not much to write home about, $13 at a 0.71%, so not even a percent. And a payout ratio of 23%, so they can afford this dividend all day of the week, with 18 years of dividend growth. So very, very exciting for people invested in the stock or looking to. Total assets, $1 billion, and it really has jumped up this year. And liabilities of $113 million. What? You're gonna be flipping my flapjacks, as Jeremy would say on financial education. Absolutely, the stock is 10x between total assets and liability. That's staggering. Absolutely, that is just off the chain. That's what you want to see. Absolutely beautiful. Free cash flow, 431 million from 2021. This is just off the chain. No long-term debt. No, just throw it away. Just give it away, mate. You might as well just put all your money in the stock, and you'll be rich for end of time. And shares outstanding, 7.6 million. Absolutely outstanding. And you've been getting beautiful beautiful share buybacks along the way. They've been buying more stock. Absolutely brilliant. Wow. If that doesn't get your heart racing and says bye bye bye, then well, what can they do to improve this stock? Well, I think with the price where it is now, I think a stock split would be right up the cards if they can get the stock down to $100 a stock. It'd be more enticing for people to buy in. It doesn't mean as a shareholder you'll get a lot more money, but it'll be just more affordable for the everyday investor. If they could drop it down to $100, I think that's where they should look at. Whether they do it, I don't think they will, but if they did, I think that would be a great thing for the stock. Obviously, can they continue to grow? That's the biggest question at the moment. Everything says so. Continue to buy more and more land and the water resources and use it to lease off to make themselves some money, as this is a cash flow machine. Obviously, getting their free cash flow up even more is probably the continued aim. If they can continue to move that up, but it's very good. I'm not getting it twisted. It's absolutely outstanding, the stock. There's not much to read home about apart from the stock price that hasn't really gone up this year. But why is that? Well, this is what you're here for. Intrinsic value. Yes, the intrinsic value of Texas Pacific Land Trust. Is there an opportunity to buy the stock? Is it overvalued? Well, let's get to it right now. Right here, right now. Let's give you the ideas, and you take what you get out of it. So the share price I've gone at $17.50 roughly. It could be higher or lower from time of recording, but this is just to give you an idea of what the stock will be at. The earnings per share at 52, where it is currently. The growth rate of 5%. So if there's only a slow growther, it's $1,003 stock. So well below its value. Now 10% growth, and they'll be going bigger than that at the moment. So 10% growth, with 52 earnings per share, you're looking at a $15,045 stock. So not quite fair value. So yeah, and you could probably say that's probably the best case scenario. But if we go a bit higher and the earnings per share goes up to 62 at the same rate, then you're looking at 1842. So you're looking around near fair value or just undervalued. But if they smash it at 50% growth and jump up the earnings per share of 72, they're 2,890 climbing towards 3,000, which would be a double gainer from here. So that's what you got to decide. Do you think this company can grow 15% and improve the earnings per share quite a lot? Do you think it'll stay the same? Then they're about fair value right now. But yeah, their revenue's been really skyrocketing, as well as their net profits. So if they continue that, these metrics might be well out of sync. But it'll depend if they can continue the growth, or if it's going to slow down. That's a question mark you got to have. Because if it slows down, then you're looking $1,500 stock all day, and it probably could be less. But if they continue to increase the dividend over time, that brings it down a little bit. So where do I see the intrinsic value of this company? Well, if you're going on current metrics, if you're looking at growth rates, persistence wise, right now, there could be an argument that the stock is worth 3,000. Now, I'm not saying that's the intrinsic value, but I'm saying that's potential intrinsic value into the future. If they continue to execute this out and these growth rates continue forever and a day, the stock would easily be more than 3,000. But if we're going to go on the slow approach and say maybe they are going to slow down, then you're probably going to look at around the 1,500 as fair value. So you'll be wanting the stock for me under $1,000. Will you get that? Well, probably not. The stock seems to be a stock that is generally always rich. But I'm not saying 1,500 you can't double for me. The stock is known to go up big time at times, and probably just before dividends are paid and they crash back down. I see that with a lot of these stocks. Then they're in it just for the dividend and let it go, and then that's when you get your buying opportunity. So this could be a buying opportunity right now for the stock. Whether there's going to be a bit of headwind coming into the future, that's probably a question mark you have to look at. Can they continue to afford to buy these assets, or will they just get the assets at better discounts? That's the question mark you could be looking at, and that could be the positive for Texas Land. So there's not much negatives to this company, so it's really up to you whether you invest or not. Not financial advice. Do your own research before you invest into any stock. Do it at your own risk. But this stock is very, very compelling and very good metrics. There's nothing really bad about this company. You can argue it's overvalued, but apart from that, it's very much a very good stock. not many people talk about this stock, but I tell you what, if you got in 5 years ago, you would have 3 extra money, and one time was 4x. So this, definitely, if they continue to be a cash king and this just continues to go up and up and up, the stock could go to something crazy. And the price right now is just the beginning. So it's question marks over where the valuation is. It's a big thing you probably have to figure out, if they're going to slow down or not, or if they just continue to rise. It could be a stock for you. But thank you so much for joining me here at Barry Charles. Remember to like the video, share it with your friends, subscribe to the channel, and we'll see you at the next video.